NICE announced their earnings today, and I wanted to go through their earnings, update my valuation on this stock, and tell you what I'm going to be doing with this particular company. So, NICE provides software for the customer experience, data centers, and companies put these software systems in place to provide the customer experience that they need to provide for customer service, sales, marketing, and so forth. And what's encouraging about NICE is that they're really growing nicely. Their top line revenue growth is growing at 15%. That's excellent. Their cloud business is growing by 25%. That's also very, very good. They're profitable and their cash is increasing at a higher rate. So their scale is there. And I really like software companies because they have high margins, they get to generate a lot of cash, and that cash ends up in on the balance sheet to use to buy back shares, which this company has been doing, where they could acquire other businesses. They can invest in the business. For example, one thing that NICE is doing is they're developing a lot of AI apps. And those AI apps are going to be sold to their customers to provide those customer experiences on AI. That's really exciting. And this company has the resources to pull that off, to really reinvent themselves and offer up a lot of AI applications. So the earnings announcement, the data that I'm seeing is positive. I'm not seeing any any type of signals that tell me that this business is broken, nor am I seeing that AI is really cannibalizing their business and taking away a lot of their revenue. Actually, I'm seeing a company that's growing. I'm seeing a company that's investing in AI. So all those things look positive to me. The stock market doesn't agree with me that the numbers look great because the stock is selling off by 15% today. Interesting. Analysts believe it's a strong buy and it's discounted by 66%. So what's the rub? Why is there a big difference? I don't see a big story as to why the market's really selling the stock off. It is a small cap, and these small caps tend to be caught up in some type of larger story. And there's a big sell off. The Nasdaq's down about 1%. So maybe these stocks are just selling off in general and taking NICE with it. It is a small cap at 11 billion. The revenue is 2.74 billion. The forward P looks great at 14. They're growing, in the mid-teens overall, and they're growing their cloud business by 25%. That's just really, really good numbers. And a forward P of 14 just shows that this potentially could be a highly discounted stock that is growing, profitable, generating cash. So I really like the metrics and how it's setting up. The growth in the company has really been there. And again, I recognize that AI is really going to change this particular area of technology. Software is just going to get better. It's going to, make it so that companies can provide service, and the sales experience and the marketing experience are really going to change. But this company is really operating well, growing their business, getting things done. They're really profitable, which is very, very good. When we look at their free cash flow, it is growing nicely, and their operating cash flow grew by 45%, which is excellent. Gross margins of 66%, profit margins of 16%, free cash flow margins of 27%. Those are just excellent metrics. 15 analysts have looked at this stock, and they primarily look at earnings per share, but they all agree this stock's really discounted. On average, it's a 66% discount. So I agree with them that it's highly discounted. And when I look at their earnings per share, especially for fiscal year 2025, you're seeing really nice growth of 11.45% on the earnings per share growth. And it's expected to continue to grow into 2026. And the revenue is going to keep growing, double digit. Those things just look really, really good to me. I'll use this data along with the free cash flow data in my evaluation of NICE. When I perform an intrinsic value calculation on NICE software, I get to a 43% discount on the company. And that's a very good discount. The free cash flow from the company looks really, really good, and it's going to continue to grow. That's the principal value method that I use. They have more cash than they do debt. Another sign of a strong business. They have a lot of cash available to invest in that AI business. Overall, their cash flows and the cash on the balance sheet is worth 60% more than their current stock price. And I'm using a higher discount rate of 10% since they are a company that's headquartered or operates out of Israel, and it's out of my home country. So I want a higher rate of return. When we look at earnings per share, I'm very conservative here. I'm using the earnings per share that's expected. I'm giving them a P at 12, which is really unfair. These guys are a software business. They're growing really well, but the market's just not giving them a solid PE. So I'll be conservative with the PE ratio there. They're expected to grow more than 10% on their earnings per share. So even using those, conservative numbers, it gives me a 10% discount on the stock. So combined, I get a 43% discount on NICE. This is an opportunity for me. I've invested in companies where I've had to wait a while, but the waiting was really, really rewarded. Good businesses, once I find them, I want to be a long-term investor. And I feel like I found a really good business in NICE Software. They're operating really well. They continue to grow. They continue to sell to their customers. That top line tells me a lot. They're growing the number of customers they have, the products they're selling to those customers. They're investing in AI. So all those things look fantastic. So I'm a buyer of NICE Software. I really like the discount. I like the direction of the business. There's just a lot of things to like. The market is following certain stories, and some of those stories are making some stocks just fly up and other stocks really get depressed. Software companies have been left behind in this AI revolution, and it's kind of a paradox because at the end of the day, the user experience of AI will be a software program. It'll be a software application. It'll be software technology. So really the customer or the consumer or the user of AI will face AI through one of these software applications. And I think NICE Software is in a really good position to be a part of the AI revolution, to provide AI products to their customers. So I really like their long-term future. I think they're an unrecognized player in the AI space. And eventually, I think the market's going to catch on. If NICE continues to get their business handled, which is grow their revenue, provide AI products, service their customers well, keep them satisfied, I think the rest is going to take care of itself. In the short term, this pullback is an opportunity, and I will buy some more shares at a discount and hold NICE Software over the long term. That's my video on NICE. I hope you found it interesting, and I'd love to hear your comments on NICE Software, on the AI space in general. And keep in mind, this is not financial advice. I'm not recommending you buy, hold, or sell NICE Software. I'm just sharing with you what I plan to do. And that's it. That's my video on NICE. Thanks for watching. Good luck investing.